Rare good news on the markets with a surprising resilience in stocks across the region. I spoke earlier to market watcher Marcus Padley from Patersons Securities. Marcus Padley, the local market seemed to defy a weak offshore lead. What went right here?
Well, I think what went right is what went right across the whole of Asia. You had all the financials going up. If you look at Resources Day, they did nothing. We got 20 points of our 36-point rise was thanks to the four big banks and Telstra. And banks up across Asia in anticipation of Bernanke's testimony tonight, where everyone's looking for some clues about quantitative easing, despite the fact the FOMC minutes last week were clueless about quantitative easing. That is the hope. But you've also got to say in the current markets, there's very low volume. We're doing under 4 billion a day, which has been our average for the last year, and that's down from 7 billion in the bull market. So it's not like things are terribly active.
You say resources did nothing. How did investors like the latest quarterly production figures from Rio Tinto?
Rios were in line. They reaffirmed their full-year production guidance as well. Iron ore, which is 70–80% of their profits, that was flat on the quarter, up 4% for the half, which means, in other words, this quarter was worse than the first quarter. So it wasn't dazzling stuff. They also downgraded a little bit on coal production. It was okay. Share price dropped about 50 cents from the announcement to the end of the day.
Now, investors weren't enamoured of Fortescue metals production data.
Their production numbers are actually really good. They're hitting all their targets, doing everything they should, but they also included with the announcement some new CapEx targets, or not targets, but estimates for their current expansion, which basically means they're spending a little bit more than people had expected. That puts your dollars per tonne costs up more than expected. So some brokers, Patersons for instance, dropped their target price by about 50 cents today, but it's still well above the target price. But they did a scale of valuations. Truth is, it all depends on the iron ore price. You know, at sort of $70 a tonne, the target price is zero, and we're currently around 120. So the valuations are quite high. It really is down to the iron ore price, but basically a very good set of numbers.
Now, Marcus, you've also written recently about so-called value investing being for the birds. Why do you say this?
It's not so much. Well, let me give you this. We haven't got time for me to really have that full discussion, but let me give you this. Broker target prices come bull market or bear market, and we're in a bear market at the moment, and the average target price is 20% above the current share price, and 80% of target prices are above share prices at the moment. This constant optimism built into broker valuations is doing nobody any favours at all. The market is down 9.6% per annum for 5 years, and I do think that rather than share prices moving towards valuations at this point in time with deteriorating economies, it's far more likely valuations are going to be moving towards share prices, the other way around, in other words. And I just think we constantly market one side of the equation, which is that the share prices are wrong. It may well be the valuations are wrong.
Marcus Padley, thank you for all that.
My pleasure, Tiki.